Hey, you won't believe what I was just digging through. The Mahindra and Mahindra Q3 FY25 earnings report. Buckle up. It's a wild ride of numbers and market share.
Mahindra and Mahindra, huh? I know they're a big player in the automotive and farm equipment game, but remind me, what exactly do they do?
Okay, so Mahindra and Mahindra, or M&M, is this massive Indian conglomerate. They're known for their SUVs, commercial vehicles, and tractors, dominating the Indian market. But they also have a growing presence in financial services, tech, and even real estate through subsidiaries like MMFSL and Tech Mahindra.
Got it. So they're diversified. Any big strategic moves recently that we should keep in mind?
Well, nothing major in this report, but it's always good to remember they're constantly innovating, especially in the EV space with their new electric SUV launches. Okay, diving into the financials, their consolidated PAT, that's profit after tax, right, is up 20% to 3,181 crore rupees for the quarter.
Nice jump. What about the revenue?
Revenue is also up 17% to 41,470 crore rupees. And check this out. Their YTD year-to-date return on equity is at 18.4% with an EPS, earnings per share, of 86.0 rupees. Pretty solid, huh?
Yeah, those numbers look good. Did they mention any one-off events that might have skewed these figures?
Actually, in the presentation, they did exclude some previous year gains on the KG Mobility listing and MCIE sale, plus some current year gains from land sales to give a clearer picture of their operating performance. That's good transparency, I think. So, should we talk about each business separately now?
Definitely. Let's start with the auto sector. I'm curious how their SUV strategy is playing out.
All right. So in the auto sector, quarterly volumes are up 16% with UV volumes at 142,000. Their standalone PBIT, that's profit before interest and tax, is up 37% to 2,167 crore rupees with a margin of 9.7%, up 120 bips. Revenues up 21% and PAT up 20%.
Those are impressive gains, especially the margin improvement. What's driving that growth?
It seems like strong SUV sales and better operational efficiency are the main drivers. They also launched a couple of new BEVs, battery electric vehicles, which is getting a lot of buzz. They were even number one in SUV revenue market share for the quarter, which is quite cool.
Very interesting. How about the farm equipment sector? I know that's a significant part of their business too.
Farm equipment is also doing really well. They achieved their highest ever Q3 market share at 44.2%, with volumes up 20%. The standalone PBIT is up 42% to 1,479 crore rupees, and the PBIT margin is 18.1%, up 260 bits.
Wow, even better margin improvement than the auto sector. What's the story there?
Seems like operating leverage is really kicking in for them in the farm sector. Their revenue is up 11% and PAT is up 11%. Even with the challenges in their international businesses, they are crushing it domestically.
Okay, so both auto and farm are solid. What about their services businesses like Tech Mahindra and Mahindra Finance?
Right. The services sector is a bit more mixed. MMFSL, Mahindra, and Mahindra Financial Services saw AUM, assets under management, up 19%, and their GS3, that's gross stage 3 assets, is at 3.9%. Tech Mahindra's EBIT margin improved by 480 bips and their PAT is up 93%.
Tech Mahindra's turnaround seems to be gaining steam then. What about the other service businesses?
Mahindra Lifespace's residential pre-sales were actually down 25%, but Club Mahindra's total income is up 5%, and Mahindra Logistics revenue is up 14%. Overall, the consolidated revenue for the services sector is up 14%, and PAT is up 34%.
Okay, so a mixed bag, but still showing growth overall. Based on these results, what's management saying about the future?
Well, Dr. Anish Shah, the MD and CEO, mentioned that their businesses are demonstrating strength in execution and that the transformation at Techem is gathering momentum. They're also focused on disciplined capital allocation to drive long-term shareholder value creation. Disclaimer, we advise investors to check with certified experts before taking any investment decisions.
Sounds like they're pretty confident. Did they give any specific guidance for the next quarter or year?
Not in this press release, but Rajesh Jujurikar, who heads the auto and farm sectors, mentioned they expect the tractor industry to grow by over 15% in Q4. So, positive outlook there. Hey, if you are enjoying this deep dive, don't forget to like, share, and subscribe to our channel.
That's a good point, especially as we transition to key financial ratios. Let's see if the numbers back up that confidence. What are some of the standout ratios from this report?
Okay, digging into the additional disclosures, there are some interesting metrics here. For the group consolidated results, if you exclude the financial services business, the debt to equity ratio is only 0.07.
That's pretty low leverage. What about their ability to cover their debt obligations?
Their debt service coverage ratio, again excluding financial services, is 7.32. And their interest service coverage ratio is even higher at 22.22. So they seem to be in a comfortable position to handle their debt.
Good to know. What about profitability?
The operating margin, excluding investment related income, is 14.60%. The net profit margin is at 8.74%. So profitability is doing well and they are managing their debt effectively.
Makes sense. Are there any trends we can spot by comparing these numbers to previous quarters?
Absolutely. If you look at the fact sheet, you'll notice a consistent increase in market share for both the auto and farm equipment sectors over the past few quarters. Plus, Tech Mahindra's EBIT margin has been steadily improving, which aligns with their turnaround strategy.
Okay, so the trends are generally positive. Any potential risks or headwinds they mentioned?
The press release does mention global headwinds, but doesn't specify what they are. Looking closer at the detailed financials, their finance costs have increased year on year. So that could be something to watch.
True. So summing it all up, what's your overall assessment of Mahindra and Mahindra's financial health and outlook?
Well, based on this report, Mahindra and Mahindra seems to be in a strong position. Their key businesses are performing well, they're gaining market share, and they're managing their debt effectively. The transformation at Tech Mahindra is also a big plus.
Oh, would you consider this a buy signal?
I'd say it's definitely worth considering, but remember to do your own research and consult with a financial advisor before making any investment decisions. This report only covers Q3 F25, and things can change quickly in the market.
All right, great breakdown. I think that gives a really solid overview of Mahindra and Mahindra's current financial state.
Definitely. And remember, those BEV launches could be a real game changer for them in the long run.